and I call to order the meeting of the MES Audit Committee meeting for May 21st, 2026. Ms. Fuller, please note members of the board present: Ms. Heller, Mr. Coleman, Dr. Glass, and Dr. Johnson, and myself. The next item on the agenda is the approval of the minutes for October 23rd, 2025. Committee members, any changes, edits to the October 23rd meeting minutes? Hearing none, the minutes stand approved as presented to the board. The next item on the agenda is the SBN Company FY26 audit plan. And for that, I call S&B to present.
Yes, good morning, everyone. Can you hear me?
Yes.
Great. Hi, I'm Monique Booker with SBN Company. Good to present to the audit committee again this year. I'm going to go ahead and try to share screen. Okay. Are you able to see my screen?
Yes.
Excellent. It's a pleasure again to present to this committee. This is now our second year in the contract for Maryland Environmental Service and completing the financial statement audit. And this is an opportunity for me to, walk the committee through our audit plan for fiscal year 26 and address any questions, concerns that you might have. I will continue as the engagement partner for the second year, returning to MES. Graylin Smith, our client service partner, he will continue in that role as well. And then we've added Christopher Mark. He will be our engagement manager, so he will be new to the team this year as well. So as a reminder of what our scope of services that we've been engaged to perform for Maryland Environmental Service, of course, it's the financial statements for the year ending June 2026, but that also includes the compliance audit, or referred to as a single audit for any of the federal funding and expenditures that the organization has incurred. So that will be part of our services. And then there's a separate report for indirect costs. And I think just as important is just us being a resource to MES. We'll talk about some upcoming pronouncements that need to be implemented this year. And just, as you're operating your business throughout the year, as transactions and events occur, there could be questions from management, there could be concerns from governance, and know that we are a resource. Yes, is there a question? Okay. So here is a summary of the phases that we walk through as part of the audit process. So right now we're concluding our planning phase. We've already had our entrance meeting, with finance, with management, and understanding what's occurred differently or changes during the year, so that we're able to take those things into account, looking at results from prior year. Again, some new pronouncements and how that could potentially impact the audit. So we're concluding that planning phase. And then we'll have our preliminary testing, and we have a timeline of that. You'll see that we're scheduling that to happen in June, where we are meeting with process owners, walking through the processes to validate who's performing what duties. We're looking at segregation of duties. We're looking at, key controls in place to address risk. We're updating that each and every year. So even if that process is consistent with prior year, we want to validate that and test that those controls are operating appropriately. We even start looking at the single audit and what are some of the which programs from a compliance perspective do we need to review for this year based on, those 26 expenditures. And then we'll have our final fieldwork phase, which is once finance has closed the general ledger for the fiscal year. And we start to do more of our validation and substantive type of testing, and then completing any compliance items that we need to complete. And then we'll wrap that up with, the financial statement drafts, having an exit meeting with management. And I know we have the opportunity, to meet with this committee again in October to be able to, review those results. So if you look at kind of how those phases are happening from a time, perspective, again, May, we're wrapping up that planning meeting with you as a committee and discussing what our plan is, and then continuing through our preliminary and final field work, so that when we get to the month of October, we are able to present final results and then finalize those statements right after the board, so that those are then finalized and shared with the state. So this pictorial, again, just shows you the SBC audit approach. This is our proprietary audit approach. We followed last year, we'll follow again, this year as part of the audit process. And what I like to just point out about this particular approach, it really is focused on understanding the internal control environment in testing that environment, so that we can conclude whether or not we can rely on the procedures and controls that MES have in place. So that preliminary phase that I was talking about, where, in June, we're meeting with process owners and performing testing. That's what this top portion of the funnel for our audit approach really dictates, that we're understanding what's in place, testing and concluding whether or not we can rely on that, which then allows us to focus in what remaining risk, knowing that those processes are operating or not operating, what are those remaining risks, so we can design those substantive procedures that we talked about that happened during the final phase. So that's what this pictorial is sharing with you as a committee. Any questions on the audit approach so far? Okay.
I've got a question.
Yes.
Just,
Go ahead.
there's been some unfortunate incidents with boards of ed in Maryland, and unauthorized use of procurement cards. How robust will your testing be with respect to MES's procurement card system?
And we do, am I still sharing? I'm sorry, I had to come out so I could see who was talking. Are you still seeing my screen?
Yes.
We are, yeah.
Okay. Okay, excellent. I'm just gonna skip ahead and say that there is a key process that we look at, that that those procurement cards would fall under this credit card process. And you'll see there, maybe I can, if you look at the functions that we review as part of that process, would be the approval of, issuing a card to a user, the approval of the expenditure coming through the card, who's reviewing that, monitoring, the use of that card within limit. So those are the type functions that we look at as part of that process.
And is there a specific number of transactions that you look at?
It varies. We do use AI CPA sampling standards. So once we get a listing of, everyone who has, the cards kind of level, we look at that volume, and we determine, so that honestly, it could vary. But typically it's probably no more than 40 transactions that we would look at throughout a fiscal year. That's kind of the norm when it comes from a sampling perspective. So you're right. It's not going to be hundreds of transactions to that nature. It's going to be within I would say a 40 realm, which would tell us whether, the process itself is operating based on the information that we're able to get for those selected transactions.
Okay, thank you.
You're welcome. Any other questions?
I just wanted to bring out that a year ago, we talked about this a little bit, and I think the issue was, since we were just upgrading how many we were doing, it may not be much that year. I don't know. And what I'm hearing now, maybe we've got enough now to do we have enough now to do the work that you just expired. So am I right that a year ago, we couldn't do it because we're just upgrading it? Now we got enough to be able to get some data back, is what I'm hearing.
And I do believe that this was a process that we also reviewed in the prior year as well, as part of our as part of the processes. So it was part of our 2025 review as well. There weren't any exceptions with that testing that occurred in the prior year.
Yeah, and if I could jump in briefly as well, internal audit does a quarterly review over the PCAR process where we also do testing around the same general things that the Monique was just talking about, but we do a little more in-depth testing. For anything that we can perform 100% population test and automate, we will do that. We will talk about the results of the Q1 review that we've completed so far a little later on in the presentation. And we're also in process of completing Q2 and Q3, which we're required to complete before the end of the fiscal year. We'll also continue to do that on a quarterly basis moving forward. But just as a preview, the Q1 report was an effective opinion with no findings.
Okay. 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 So here on this slide 8, based on our planning, based on what we've learned from prior year, here are audit areas that we would still focus on as part of the 2026 audit, looking at cash reconciliations, making sure that those are being performed and balances tying back to cash held, same with investments and its valuation, always looking at the collectability of receivables. We know we have the billed receivables, we have the unbilled project costs. So again, understanding that process, but then also looking at what's included in those balances as of year end and making sure that those items are earned in accordance with contracts, and then looking at the collectability of those, any concerns that management would have, and being able to collect on those receivables, looking at your asset capitalization and making sure that new additions and or disposals are properly accounted for. Any leases that are out there from a right of use standard in accounting, we look at that. On the liabilities, our risk is the completeness of those liabilities and what's known as of our audit period that relates to year end, and making sure those are recorded in the proper period. Your accrued workers compensation, we know that information is coming from from the state. The accrued vacation costs, and really accrued compensation now, because last year, if you recall, we had to implement the standard as it relates to sick leave. So now we're going to continue with that in its second year, as that estimate that management would make on sick leave that's been earned, accumulated, and expected to be used on a go-forward basis. So that will continue to be included in those liabilities on the financial statements. Your OPEB accounting, I believe this year is the year that a full actuarial report will take place to assist with that accounting and recording. With Midshore fund and the landfill closure, post-closure cost, another significant estimate that's included in the financial statement. So we spend time and, understanding the individuals that are performing that cost estimate, looking at the reasonableness of that and whether there are any changes that took place or should take place that impact that liability as well. Your bonds, liability, the indirect cost allocation. One of the deliverables we talked about was the indirect cost report. So we start looking at that from an audit perspective and understanding what MES has in place when it comes to assigning cost and allocating cost across projects. That's an important process that then impacts that separate indirect cost report as well. Revenue recognition, again, based on the earnings and the contracts for services, charges that are there. And then, of course, your grant compliance due to the federal requirements and compliance as it relates to the single audit. So these are areas that we would continue to build particular audit procedures around as part of the financial statement and compliance audit. I mentioned last year we implemented GASB 101, 102, 101 being the sick leave policy. This year there are two pronouncements, one relating to the financial reporting model, which is primarily related to the management discussion and analysis that's included as part of the financial statements that management, does, and explaining variances, explaining, information that the user of those financials would want to know based on the results. I don't expect a lot of change here for MES, but this particular model is just trying to enhance and make that management discussion and analysis as robust and informative as possible. So that's something that we'll look at and see if there are any changes that would need to be made to the MD&A in order to be in adherence with the new model. And then you also have GASB 104, which is related to footnote disclosure as it relates to capital assets. I do believe that the footnote that we have in place, included in the financials for MES, is substantially in compliance with this. It's just making sure that the different asset classifications that's included within capital assets are clearly shown within the footnote. So again, we'll compare it to the requirements and just make sure. But we're really talking about classification type of items to make sure that disclosure is complete and in accordance with the new pronouncement. So again, we'll work with finance to make sure that these items are properly addressed within the financial statements themselves. And with that review of the internal control, which was also a top portion, of that audit funnel, we're assessing the control environment in two levels. So here's the first slide 10 and 11, where we're looking at overall control environment, risk assessment, control activities, information communication. This is also where our IT team comes in and works with the audit team and meeting with IT of MES and just understanding what are the current policies as it relates to your IT infrastructure. Has any of those policies been updated? We compare those to best practices, as part of this process, overall monitoring, and making sure that, again, kind of who's preparing versus monitoring transactions. And then the second level is the key processes. So you will find that these processes are consistent with the ones that we reviewed in prior year. We still feel that these are the key processes that impact the financial statements of the organization. So your treasury process, that's with the cash and investments, looking at, meeting with the process owner, walking through the process to make sure we understand, again, who's preparing, who's reviewing, who's responsible for the various steps. Think about as an audit team, what's the risk, what could go wrong, in that process. And then we make a decision whether we're going to select a sample and test controls that as we talked about. If you look at that bottom one, credit card, you'll see D is checked. So we know we take a sample of transactions from throughout the year in order to conclude on its operating effectiveness. But then some items such as treasury, we're really validating the balance and the reconciliation as of year end. So we're looking at that as of June 30. We're not selecting, say, 3 months throughout the year. We're really, we believe the most effective is to look at that at year end. So we call that a more substantive approach. So if column D is not checked, that's because we're taking a more substantive approach. But for like expenditures, credit card, we're taking a test of controls by selecting a sample of transactions throughout the year. We do the same for our payroll, our revenue, with the billing and the charges that we were talking about, and looking at contracts and making sure that that billing is appropriate, included in the proper period, and any cost included and allocated is reasonable basis to have that in place. So those are the key processes that we would expect to and plan to review for fiscal year as well. The information technology, again, we bring in our IT team. Julie Paris, that leads that team, helps us with that portion of the audit. And then the grant compliance is where the single audit compliance testing comes in play. And that really concludes, our plan, how we expect to, complete the audit for 2026. We know it's not a fraud audit, but we know fraud, it can happen. So, whether that's internal, whether that's external. So from an audit perspective, we keep that skepticism in place. So as we're interviewing, again, looking at segregation of duties and key controls in place, we are thinking about, are there controls in place that would, prevent fraud? Are there monitoring activities, steps in place that if it were to occur, how quickly, could it be identified? So we're at least keeping those things in mind as we're going through the audit process, and would bring any fraud that we identify to governance attention if we become aware of such instances. So I will stop there. If there are any other questions or items that you want to share with me, for me to incorporate or to consider as part of our audit process.
Thank you, committee members. I have a couple of quick questions, and that's only because we have a resolution on the OPEB coming up. When you do the audit for the post-employment benefits, are we going to see a year-over-year trend analysis, including, are you going to do any kind of benchmarking versus industry averages of what MES versus, or what are we going to see for the OPEB audit?
Right. And so for the OPEB audit, that is a fund that's included within the statements. We do expect these statements, if I'm not mistaken, I do believe MES issues comparative financial statements. So you would at least see the 2 years, as it relates to the assets and the liability of the OPEB fund. The assets, are coming from the investment statements, and we're able to, tie that valuation. The liability is where that estimate comes in. So one of the things we do is we review that actuarial report. I wouldn't say we're benchmarking, because the actuary, are performing their services as their specialists, but we do look at the assumptions that they use in determining, their estimate of that liability as it relates to the other post-employment benefits. So we do look at the reasonableness of those assumptions that are being used, and oftentimes have a conversation with the actuary to, understand, where they're pulling that information from. But you're right, there wouldn't be some other benchmarking that we're doing as it relates to that plan. We're really trying to validate the estimates and the assets that are in that plan as of year end, but we will show a comparative, right? And understand any significant changes in assumptions or variances during the year that we would be able to bring to the committee.
Thank you. Committee members, any questions?
None from me.
I have one. Are there any pronouncements coming up, in 28, 29 that will require us to do a lot of work in preparation for it so that we can get ahead of it rather than get behind it? And I know nothing is not set up for now for later
Right.
on, but you know what things that they're looking at.
Yeah, and I would say nothing right now that's on the horizon or in works that's going to have any massive changes yet, right? I mean, there's discussions and, always something going on with the GASB board, but nothing at this point that I would say, let's prepare for this and this is going to, change completely the way, MES is looking or, preparing financials. Nothing to that extent that's viable.
Thank you. Any other questions, Dr. Glass? Ms. Heller? Okay, well, thank you, Ms. Booker, for your time.
Thank you. I appreciate the opportunity to meet with you.
Thank you.
Take care.
The next item on our agenda is the resolution for the OPEB trustee agreement, and for that, I call on Mr. Patel.
Good morning. You received this resolution 26051R. This slide and the next slide, I'll discuss this resolution and provide you with some additional information about this resolution and the change. The first item on the slide is the purpose of the resolution. This resolution aims to improve fiduciary, administrative, and operational functions of the OPEB trust without altering benefits. So currently, PNC is our financial advisor. BNY Mellon is our trustee. And it has been like that ever since this OPEB trust agreement came into effect. It was working well, and the charges were reasonable, and I'll show you why we are recommending a change. What was happening is since PNC is the advisors, if they want to execute a trade, they're gonna send a secured email to BNY Mellon. Then BNY Mellon may take 3 to 4 days, and depending on, if it's a weekend, it may take 6 to 7 days. So that was the main issue. And we experienced that issue for a while, for 2-3 years. Now, BNY Mellon has changed their method for executing trades by PNC. So what they have now is a portal. So now PNC will have to go to the portal, and instead of secure email, they have to do the trade, and then it will be executed by BNY Mellon. The issue we faced is the same portal that MES is right now using to administrate the funds. So we have the same portal there where PNC will be doing the trade, and MES will be doing the administrative functions and management. So it will be like one portal, and then responsibilities will probably, will be who did this, who did that. Of course, we can go into deeper security and did the audit. The best thing to do is that if we appoint PNC to do the both, that this is their sole responsibility, and MES will be administrating the trades, the funds. So that's why, we decided to bring this resolution, because it will make it much more easier for PNC to do the trade, and MES to administer and review it, verify. So that's the number one. PNC is already our a financial advisor. All we are doing is giving them a dual role now. Independent fiduciary opinion confirms no conflict in single institution holding multiple roles with mitigations in place. In the next slide, I'll give you some examples that PNC is doing this dual role for state of Maryland, a lot of cities, municipalities, and it's a huge asset management operations at PNC. We are not changing any of the benefits, this OPEB trust. So the main purpose of this is to assign PNC as a financial advisor as well as trustee. And if you look at the most important thing, auditor oversight. BNY and PNC statements are currently reviewed monthly by finance and provided to our auditors, SBN company, annually. So Monique didn't mention that, but those statements they are receiving as a part of the audit, and finance monitors those statements monthly to make sure what is the return on investment, how it changed from the previous one, what contributions we made. We are doing that functions, and this process will continue even if PNC is acting as both investment advisor and the trustee. As a matter of fact, we will have more communication. We can go directly to PNC and ask them the question if you see discrepancy on either side, instead of dealing with two entities. So we can go to the next slide, please. So PNC qualifications. Maryland Local Government Investment Pool. State of Maryland, through the competitive bidding, selected PNC as the custodian and investment manager for Maryland Local Government Investment Pool, averaging $11.9 billion in short-term investments for 260 participating local governments. So I'm sure they thoroughly went through that. There's no conflict of interest. There are two separate divisions within the PNC, and the state is trusting them to do the dual role for $11.9 billion. There are other government entities utilizing PNC as investment manager and custodial. Cecil County, Hagerstown Community College, City of Hagerstown. There are some of the examples. We can list hundreds of examples because per PNC, majority of their clients prefer that they do dual role. And I'll show you in a minute, it will save $10,000 annually because right now, PNC is charging us the advisory fee based on 0.25% of our investments. BNY Mellon is charging us about $2,500 per quarter just to do the trustee work, okay? If we employ PNC to do both the functions, then they will waive the trustee fee because now it is all within PNC. They are not dealing and spending time going back and forth with BNY Mellon. And as I mentioned before, PNC's trustee and custodian status will allow them to buy, sell with the trades completing in 24 hours, which sometimes takes 3 to 7 days via BNY. So when you buy, what time to buy, what kind of funds to buy, those are quick decisions. The faster you execute those trades, you get the price you wanted. So that will make it much more simpler for PNC to execute that. So overall, number one, PNC is qualified. They are doing billions of dollars for the state of Maryland. The overall PNC asset management, who will be the trustee, is doing over $245 billion in the trustee agreements. Just the trustee agreement, $245 billion. So PNC is very well qualified. We are mitigating any conflict of interest or any issues in analyzing both sides, the investments and the custodies, our fund balances. PNC is given a clear directions that they can have only 60% plus or minus a few percent in equity. Even within that, we have given them instructions that they have so much of the large cap, only 5% of international stock. They are given that in the bonds, they have to have a certain percentage. Certain percentage should be in the money market funds. So all these guidance are given to them. We give statements to the auditors, and and I check it too, that they comply with those guidance, and they cannot make the changes of that particular percentage allocation without our approval. So I will answer any questions you have at this time, but based on all these facts, I believe that it will be better for MES to have PNC as the advisor as well as custodian, because we are already doing all these verifications on a monthly basis. The auditors are doing on the yearly basis, and I don't see any issues of conflicts because they have separate divisions or any inappropriate trades or, having like cash balances that are very high, so they can have a cash balances because they are restricted within what we tell them that how to trade. Any questions?
Yes, I have a couple of questions. So you're telling me there's no conflict of interest in having PNC as the investment advisor and the custodian, and other local governments are also doing it. My first question is, what was the driving force to change since 2008 when this resolution was made to BNY to PNC? Was it just the cost saving, or was it the ease of trade? And who made the decision? Is it the executive? Who all involved in this decision to switch?
The decision will be made by the board. That's why I'm presenting it to you.
Yes, I get that we will.
Yeah.
But,
So the trade efficiency is the main thing. The PNC has been asking us to do this for years, 3 years. And because of this reason here, we did not concentrate on this. I say, okay, if it's costing us $10,000, that's fine. It will be probably give ease to everybody that they are separate. But when the trading timing and the administrative burden was increased by BNY Mellon, that's when we decided that, okay, this is the time to discuss and move forward with it. So it is not the cost, it is mainly the ease of trading and monitoring by us, because we will be monitoring instead of from 2 institutions, we have been monitoring by 1 institution. So I did not see any risk. And as you see that the state government and all with billions of dollars through the competitive bidding selected PNC. So they must have done thorough investigation. And our legal, we hired a legal and fiduciary counsel, and their opinion was that there is no conflict of interest concerns.
And Madam Chair, to answer your question, yes, over the last few years, PNC has presented it to us as a cost savings and a more efficient method, which, as Mr. Patel has described. And over the last year or so, the research has been put in to document this, including seeing is it viable, seeing if there is a saving, and then seeing is this something that other institutions do as well. So the fact that they just won this contract again for the Maryland Local Government Investment Pool, and it's 3-4 orders of magnitude larger than the funds we're doing, and the savings and the efficiency. This is why we're bringing it to the board at this time. As far as the financial management, it's mainly a small committee of me, Mr. Patel, and a couple other people in finance that monitor the funds, and we receive a quarterly update. I'm involved in a quarterly virtual update, but finance and PNC are in contact all the time.
So just as a follow-up, and I see Mr. Coleman had his hand up. You tell me the PNC actually bid for this contract with the MLGIP, but for MES, we are just awarding it to them through this resolution, or did they bid? Did we reach out to BNY for any kind of counter cost savings?
And no, because we can continue with PNC and BNY Mellon. If we bid and whoever like BNY Mellon or any other bank wins the contract for the custody to act as a custodian, it is not giving us any advantage. The whole advantage is so they have a trading efficiency. So if you go out bidding and if somebody else bids or if a BNY Mellon, we asked for BNY Mellon to reduce it because they keep on increasing, from 900 to 1,500 and over the years. And we asked them, why you are increasing, and said that's the corporate decision. So of course we tried, but that is not the main concern, to reduce from 10,000 to 8,000, whatever, or to give it to somebody else as a custodian, because it's still going to be the same issue of trading efficiency.
Mr. Coleman.
Thank you. Can you refresh my memory here? How much are we talking about? What's the size of the fund? And is it 100% fully funded now, or are we still working towards 100%?
Correct. So the fund balance as of April 30 is 11 million, close to 11 million, 10,990,000. And yes, as of last year, we are fully funded 100%. We will have to wait for the actuarial calculation as of end of this year. And we will fully fund it. That's the intention, that we will be able to fully fund once we get the June 30, 2026 actuarial evaluation.
And if the fund is short, how do you make up the difference? Is that part of the fringe benefit charge to MES clients?
Yes, all the funding for this over the years and all, it is part of the fringe benefit cost. If we are short, it is not a requirement that we immediately fund that to the 100%. As a matter of fact, majority of the governments and large cities, and they already are not funded 100%. So actuarial evaluations will increase funding little by little for next 10 years, 15 years, based on their calculation. MES is intending to fund 100%. So that's why we are funding 100%. So all of a sudden, it's not going to happen, but all of a sudden, if we say, okay, this year your contribution has to go significantly higher because the actuarial valuation is significantly higher, it's our decision at that time to fully fund it or spread it over 10 years, because we get those models from the actuaries.
So when you say it's our decision, do you mean it's management's decision or the board's decision to spread that cost over time?
As I say, I don't expect a sudden increase in it that we will need to fund a very large amount, but we can usually is MES is making that decisions based on our financial results for the year. But if board chooses to receive that, I cannot make that decision, but it is has been the financial decision by MES so far.
Okay, thank you.
Did you really answer that? Did you answer that really? You said the question was, I thought, is it administrative or something else? You said it is done by you and others, but is it who should be doing it, or is it trustees that are the ones who are making the decision?
No, trustees do not make that decision. I thought the question was whether the board will be involved in it or it will be financial decision. The actuaries will give us the evaluation. So say at the end of June 30, say, okay, if you want to be 100% funded, you need $150,000. At that time, we have to book it before June 30 to be included in this year's cost. So that's the instant decision we make. Say, okay, we're gonna fully fund it or not gonna fund it. The trustee or the investment advisor, PNC, has no role in it because that's another independent actuarial evaluations. But
I believe, Mr. Patel, the last time we had a situation like this, it may not have been that it was actuarially required, but when we had a great year 2 years ago, we made a contribution in advance and we booked it. But then when the numbers are brought to the board in the fall and they're completely completed through the audit, then the board approves the way it was handled. So the list of how the funds were distributed from net assets, it was included in that list. But I don't believe we asked the board to approve it in real time because it's in between board meetings. If it's the board's desire, well, the audit committee wouldn't meet, but it would be maybe in the HR committee. But I don't think the timing is available for that decision unless we want to call an emergency meeting or something. And it has been a management decision in the past.
I just feel that the agency should avoid not having that fund fully funded and not get it. If management is going to make a decision at some point in the future that the fund is not 100% fully funded and you want to stretch out over a period of years an additional contribution to bring it back up to 100%, then I think that decision ought to be made in consultation with the board.
Understood.
Committee members, any questions? Mr. Patel, are you asking the committee to, I guess the board will be voting on this at the next board meeting. You're not asking us for a vote yet.
Right. So, of course, the full board has to vote on it. And the reason I did this presentation and I feel very comfortable moving with this is that what will be the recommendation of the audit committee to the board? And that's the audit committee has to decide. But I believe that my presentation should be putting the audit committee at ease that we have controls. There are advantages, but then there is no voting for that. It's just your recommendations. But if you have any questions, hesitance, I'm happy to answer any other questions. I just doing the presentation here to make sure that you have all the information to make that decision, and it will be ultimately beneficial, and there are hardly any risk, for my opinion.
And I think in the past, when a resolution has come to a committee, the committee would vote to approve recommendation of the resolution at the full board. So you're not technically approving the resolution right now, but you're approving recommending to the full board that they approve it.
I believe you're right, Ms. Fuller.
So I'm going to ask for a vote for either recommending, or we could also send it to the board without any recommendations or decision by the full board. So do I have a
Madam Chair, I'd be willing to make a motion that the audit committee recommend to the board the approval of resolution 26-05-1R.
Thank
I'll
you.
second that, Mr. Coleman.
Thank you, Ms. Phillip. Guess we'll take a roll call vote, or do we show by hand? Sorry, I'm in the wrong board. No roll call. Show of hands. All
I'm in
those who.
favor.
In favor.
Thank you. Motion passes unanimously to the full board for approval. Thank you, Mr. Patel.
Thank you.
Our next item on the agenda is the internal audit report, and for that I call Mr. Ryan Dowdell.
Thank you, Madam Chair. Good morning, everybody. My name is Ryan Dowdell. I am the acting chief of internal audit. We had some change in the audit department. Ms. Condra has moved to TESS, and starting in January, I have been the acting chief. I believe Ms. Condra gave a presentation during the last audit committee giving a little bit about my background, so I'll do an abbreviated version now. I have spent the last roughly decade in internal audit at either T. Rowe Price or before that PNC Bank, working my way up after receiving my accounting degree from Westminster College, which is in Northwestern Pennsylvania. So I guess we'll move on to the agenda. We have a number of things to talk about today, starting with the internal audit update for the plan years of 25 and 26. We'll go over a brief update of the org chart, some audit results of the audit projects we've completed from the FY 25 and 26 years, and the audits that we still have in progress. Then we'll move on to the audit plan from 27 and 28. We'll talk about the external quality assessment, and then we'll talk about our billable project activity. Any questions on the agenda before we move on? Awesome, thank you. So as I noted in January, Ms. Condra had stepped over into a new acting role in TESS, and I was asked to step into the acting chief of internal audit role, which has led to a vacancy in my previous position that I was hired for as the lead internal audit specialist. That position is currently on hold until we settle, kind of all the acting roles. Hopefully by the end of the year-ish, we should have that accomplished. And then we still have our other staff members, Alex as our internal audit specialist, and Ryan and Nate as our internal audit trainees. Thank you. We're going to talk through our 4 audits that we have completed so far year to date for the 25 and 26 audit program. 3 of which, the Poplar Island Contract Management Review, the Midshore 2 Site Management Review, and the first quarterly P-card review having effective opinions, and the 4th one, the HR Compliance Teleworking Policy Review, having a partially effective opinion. Thank you. As far as the Poplar Island Contract Management Review goes, it was focused on the contract between MES and MPA and compliance with that contract, including budget management, invoice tracking, subcontractor oversight, and reporting. Overall, like we said, the report was an effective report with 2 internal audit findings. One of those findings being staffing constraints leading to some gaps in coverage for the site safety officer, and the other one being outdated site standard operating procedures. About 43% of their operating procedures for the site were determined to be either outdated or no longer applicable. I will note that both of those findings were remediated by the business and validated by internal audit before the audit report went out, leading to them being lower risk findings and, ultimately resulting in the effective opinion. Any questions on the Poplar Island Contract Management Review? Thank you. Moving on to Midshore 2. The Midshore 2 Site Management Review, again, similar story. This audit focused on the site management of the Midshore 2 facility, including maintenance and procurement, inventory management, staff allocation, and ultimately ensuring contract compliance. Again, overall, an effective opinion. There were 3 audit issues identified here. There was one incident where we witnessed an employee in violation of the smoking safety procedure, smoking in proximity to some potentially flammable materials. We indicated there was potential tripping hazards in the maintenance area. They were storing some parts and things on the floor rather than, on shelves. And some of those parts were determined to have been obsolete parts that no longer had use at the facility. And they indicated that they were unaware of the policy and there was no policy to dispose of those parts. Again, all 3 of these issues were remediated by management and validated by internal audit prior to the audit report being distributed, which also led to the effective opinion. Any questions on Midshore 2 Site Management? Perfect. Moving on to the first quarterly P-card review. So as we previously talked about, internal audit based on Prop 102 is required to perform a quarterly review of the procurement card process and management and oversight of that process. We completed the Q1 evaluation already. It was determined to be an effective opinion as well. Some of the things that we look at here, we look at, we take a sample of the transaction data. Our sampling guidelines require us to get a little bigger sample. So I think we believe we sample 45 receipts, but we also do a lot of automated testing. So anytime that we can automate a test, either using the data analytics tool, we obviously would like to do that to test 100% of the population. So we do that for for instance, one of the examples would be like split transactions, making sure that someone didn't go and say their authorization limit's 5,000. They didn't go spend or do two transactions, splitting their total cost to be more than, so I guess, explain that poorly. They didn't split it into two transactions, one being like $2,500 and one being $2,600 to circumvent their single transaction limit. So we do 100% testing on that because we can use TA to say, were there two transactions that were close in dollar amount to their single transaction limit that happened on the same day or within a couple days. So we do 100% testing of those. Again, we're currently working on the Q2 and Q3 reports, which will be issued by the end of the fiscal year. Any questions or comments, concerns on the Q1 PCAR? Awesome, thank you. HR compliance telework policy review. This audit focused on the implementation and effectiveness of the teleworking policy with a focus on compliance around eligibility criteria, agreement execution, and performance monitoring. Overall, this one was given a partially effective opinion with 3 audit issue themes. The first of which being policy governance gaps. So we identified 3 instances where we didn't have formalized processes in place for the directive controls that were established in the policy. One of those 3 instances was remediated with a change to the policy in December of 2025. The other 2 are currently in remediation with MES management. The second one is missing documentation and fragmented processes. I noted that there was a 19% of exceptions with missing agreements, late execution, or missing signatures for the telework agreements, and 21% exception rate for the accountability forms, which were required to fill out at the end of every week. We determined that some of this was due to a lack of a centralized process for storing and housing all of these things that seemed to be the root cause, and standardized procedures for how those processes were supposed to work. We've worked with management. Management's putting in place a formalized, centralized process within the payroll, MES's payroll system in order to remediate that finding. And then the third one is inconsistent completion and use. This focuses primarily on the weekly accountability forms. Again, they weren't always completed. And then when they were completed, there was some inconsistency as to the standard of like the level of detail of the forms. So when we implement the new system, or when MES management implements the new system, we recommended that they provide an in-depth training to make sure that everybody understands the level of detail that these forms should be filled out with. And as part of MES's decision to implement it in the payroll process, all of the comments will be reviewed, and the review will be documented by their manager as part of the biweekly timesheet process. All of these corrective action plans had audit due dates of on or before 9/30/2026. I think that Dr. Glass and the MES management are shooting for some earlier deadlines, but as long as they're done by our audit dates, that's primarily what we care about. Any questions, comments, thoughts?
Mr. Dowdell, just a quick note. Is this going to go to the HR committee for review as well, or does this have to go? Dr. Johnson is here.
If there are any changes to the policy, it will have to go, and those policy changes will have to be reviewed and approved by the board. Otherwise, I don't know that there's anything to go. If we want to send the report, we absolutely can, or, the slide, we can absolutely send the slide. I have no problem doing that. I have no problem coming and presenting it as well, if you guys would like to hear it.
Mr. Coleman?
Yeah, how many employees are currently teleworking?
That is one of the questions that was difficult to answer during the audit. Due to the decentralized process, I don't necessarily know exactly how many there were. I believe the number to be around 200, potentially less than that. The way that I selected my sample and did my testing was by taking whether they had an account or a telework agreement and or a accountability form completed. And then I compiled that list and used that list as my population for testing. Once we implement the new processes, or MES implements the new processes, we'll definitely be able to provide that information.
Okay, I'd be interested in knowing that when you have that together. And Madam Chair, I would hope that our participation, which is being recorded, will constitute our accountability form for teleworking today?
If Madam Chair, if I could, so, this was an audit I requested, after learning that, there was some confusion about the policy, and its implementation from the executive level in the agency. And Mr. Dowdell is not saying directly what we're intending to do and how we're intending to train, but end of
That
June.
was my question.
Thank you, Ms. Phillip. End of June, start of the fiscal year, anyone that teleworks will have their telework agreement in Workday along with their employee file. Okay, so step one, we will know how many people are teleworking because all of those agreements will be in one location with their personal file, and Mr. Dowdell can just go and query it with IT's assistance. Then IT and Mr. Dowdell have worked together so that the timesheet, will have, if you are eligible to telework, it will have your days, and you will have to put a note, like a journal entry in the financial side, of exactly what you did while you were teleworking. And when you submit your timesheet on those days that you were teleworking, the manager or supervisor will have to read yours, or they have to review your timesheet, and there will be training on how you implement the timesheet in Workday and document what you did while you were teleworking, and that your manager approved it after seeing it. So that's the technological fix. It's already been put into Sandbox. I believe they've tested in Sandbox and it's ready to go. We're just going to roll it out with an educational process, because then after that, just like our changes with the purchase orders last year, after we start the fiscal year and we've done the training, then we will start disciplinary action if it's not held to. So in this exploration, we asked people not to go fill out telework agreements. When Mr. Dowdell started, he has data on, even though that was the message sent out, people did go and start filling out telework agreements. But we just have to tighten up the actual accountability of how we implement telework. For the reason why there's the number of 200 is because 630 people are emergency essential and do not have access to telework. So there's approximately 200 employees, that's including CBT, that have the opportunity to telework. So, but that's our plan. That's management's plan. We're going to roll it out with an educational program, and everything will be in the database now. So Mr. Dowdell can then check the audit, check by auditing in the future. So happy to answer any questions.
Absolutely. And the piece that we're still, haven't completed yet is, internal audits validation of the remediation. Since the audit issues have not yet been closed, but remediated by management closed, we can't test to make sure that the implementation of their, remediation has been performed adequately. But we will definitely do that once everything gets closed out. We will take some time, go back and retest to make sure that everything's operating as intended. Any additional questions, comments? Okay, awesome, thank you. Moving on to our audits in progress. We currently still have 7 audits in progress that are technically part of the 2025-2026 plan. We have the biosolids building review, which is currently in the testing phase, the review of the MES retiree medical reimbursement program, which is in the planning phase. I will note that one's just about to enter testing. We're right there on the border. We didn't get it done before the slides were prepared. The review of the safety communication and implementation process, which is still in the planning phase. The contracts for the life, short and long-term disability contract review, which was a special investigation asked for Dr. Glass, currently in the reporting phase. And then 3 that were required to complete by the end of the year. The Workday application access review in the 2023 OLA finding or report. There were 2 findings, one of which requires MES to complete an annual review over our Workday application layer access. So we are making sure that we get that one completed by the end of the year. And then as we've previously discussed, the 2 remaining quarters for the P card review. Any questions on our remaining audit projects?
These are fiscal costs, good fiscal year.
Yes, yeah, they are fiscal year. We have 5 weeks roughly to complete as maybe 6 weeks, as many of these as we possibly can. From my perspective, I think that I hope that we can get 6 of the 7 completed, potentially rolling 1 into the 27 audit plan. I'm confident that we can get 5 of them or rolling anything into the plan.
Mr. Coleman?
Thank you. Could you go back to one screen, please? What's the audit 26-02? What's that about?
Yep, it was an audit that is about the safety communication and implementation on the Montgomery County facilities. I believe that it was a part of the 2026 plan. It was asked for by EO management. So we're looking at kind of the process where the safety policies, procedures, and documentation are communicated from MES safety team to the site, and making sure that those agree with the Montgomery County stipulations provided in their contracts, and making sure that kind of everything is well communicated and documented.
Okay, thank you.
Of course. Any additional questions? Perfect, thank you. Moving into the second part, the 2027 and 2028 internal audit plans. So our internal audit charter states that the internal audit plan has to be reviewed and approved by quote unquote the board before the start of the audit plan on an annual basis. So this is our draft 2027 audit plan. The audit plan was based on the 2027-2028 biannual risk assessment completed by internal audit. The risk assessment contained information and input from MES management through interviews and surveys, as well as some fiscal data relating to vendor payments and customer invoicing. This audit plan does include carryover projects from the 2026-2027 audit plan, and even some that were deferred from before that. Starting off, going through the audit units here. The first audit unit is our internal audit annual risk assessment audit plan preparation. We have 150 hours budgeted for that. Something that we will be doing every year. So we'll expect to see that in the plan every year. Monitoring the fraud hotline, again, something that we do constantly. We have 100 hours dedicated to monitoring the hotline and then completing any projects that come through the hotline. Since I've been here, we haven't had any hotline incidents, and I don't believe we have in the fiscal year 25 or 26. So limited applicability there to this point, but want to make sure we have hours in the plan to do that. Special investigations, we have 400 hours dedicated to anything that MES management or Dr. Glass would like us to look at. Auxiliaries, so oversight of any external audits that we may be asked to oversee. Corrective action plan follow-up, so like we were talking, those audit issues from the HR compliance review, following up on any of those previous audit findings. That's in that category, as well as the external quality assessment, which we'll talk about in a couple more slides. We have 2,500 hours for consulting and advisory services. This is kind of where our external billable hours sit. The bulk of those hours are dedicated to that. We also technically could be asked by anyone in MES management to do any consulting over process or new process implementations, IT implementations, anything like that. So we want to keep a couple hours in the plan if anybody asks for that kind of support from internal audit as well. Information systems, we have 1,200 hours for information systems. One of the reasons that we want to take a look here is in 2025, the IIA, which is our governing body as defined by the charter, states or introduced what they call specific areas that we have to do different audits over. And one of those areas is cybersecurity. That was kind of their first technical bulletin, that we should make sure that we're looking at cybersecurity. There's kind of a couple different ways that you can go about it. You can either add a piece of a cybersecurity function to each of your audits that you currently have on your plan, or you could do a standalone audit over cybersecurity. It's my understanding that Do It IT from the state does a review of our cybersecurity. So kind of the thought process here is to take a look at the work they've done, do any validation work, and see if we can rely on their work before we do our own engagement. Also, that annual review of the Workday Access Management is bucketed there as well. And then another project that I think I'd like to take a look at is the oversight of our AI tools and resources. As far as cybersecurity goes as well, what information are we putting out potentially onto any of those AI tools that may live outside of our IT infrastructure? The integrated piece, we have several audit projects that were deferred that we brought into this piece. One of those is the 2024 project AE shortlist process. That project was started when we had a chief of internal audit that was separate from procurement. And then when they were terminated from the agency, Ms. Condra took back over both of those roles, which created a potential independence concern. Now that we no longer have that independence concern, I'd like to pick that audit back up. It's been deferred on the audit plan since 2024. We also have a deferred project from the 2026 audit plan for the review of reimbursable contract agreements. And then I'd like to spend a little bit of time to look at some of our contract and vendor administration management practices as well. So we have 1,200 hours budgeted there. The quarterly P card audits, these are kind of moving from, this will be our fourth iteration. So they're kind of moving from like actual full-blown audits to more of a continuous monitoring activity that we're going to be doing every quarter. So as I noted before, a lot of these are being, although this testing is being automated, so we don't expect to spend a whole lot of hours here. But if we do note any exceptions, obviously we'll dive deeper. We have 150 hours in the plan for that. Human resources, we have 400 hours on the plan for that as well. I think that we'll spend those hours probably looking at something around the employee benefits, review employee benefits. We have a couple audits in the past that have looked at some of those benefit programs in a couple of areas that I think that we may have some improvement for there. So I want to look at those. And then the 2026 operational piece, we have deferred projects from 2020. Sorry, the operational piece, we have deferred projects from 2026, the inventory review of Masonville and marketing contract management process, which will take up those 600 hours. That leads us to a total of 7,250 hours for the plan year. That is including our billable work and our audit work. We have removed some hours from that total for internal audit training, for administrative things along those lines as well. Sorry, I know that was a lot and I talked really fast. Trying to be cognizant of time. Do we have any questions or comments in the 2027 audit plan? I'm not sure how exactly it's going to work, but as I indicated, the charter asks that, or the charter states that the board should approve the annual audit plan. In other areas and other boards that I've been a part of in the past, the audit committee would approve that. Our charter says the board should approve it. So I'm not sure if this committee will be the one that will approve the audit plan, or if similarly, Dr. Glass and Mr. Coleman have comments.
Oh, I was waiting for Madam Chair. So I just want to note for the audit committee that it's been about 4 years since our last. Mr. Patel might be able to help me. We're due for an Department of Legislative Service, Office of Legislative Audits, triennial or 4-year audit. So I just want to make sure that, Mr. Dowdell, you understand that we'll be visited. It's mostly that finance hosts them, but you'll have a role in interacting with them. So you don't have those hours here, but it could easily fit into one of your subsets.
Dr. Glass, I believe that those hours are a part of my auxiliary, 550 hours.
Oh, okay. All right. See, can't beat the auditor. All right. Excellent.
Mr. Coleman?
Yeah, I mean, the biggest component from an hourly standpoint is the billable work that you're doing. Is there any concern? Are you finding any issues that you're not able to accomplish other internal audits because you're spending too much time on these billable projects?
I think that that's an interesting question. And from my perspective, we do have audit projects from the 26 audit plan that will be deferred to the 27 fiscal year. I don't know that I have enough information based on my tenure here to determine whether that the root cause of that is spending too much time in billable work, or if the root cause of that is the internal audit staff's I guess, inexperience in completing actual audits. We have 3 internal audit staff underneath of me currently. I believe that the 3 of them have completed 4 or 5 audits over the course of their audit tenure. So, which is one of the reasons I pulled hours out of the plan to focus on training, was to make sure their audit staff is adequately trained to complete audits in a timely manner. Our average cycle time right now, from the time that we send out the audit planning memo to the time that we send out the report, is 288 days. Most of our audit project budgets are between 200 and 400 hours. From my previous roles and experience, I would expect a 400-hour audit project to have a cycle time closer to 120 days. So I'm thinking that if we can increase cycle time, we should be able to increase audit completion, which should allow us to complete the number of projects that are dedicated, or that are in the plan and the billable work within the year.
Do you have any process in place where you know, how do you choose if you have a conflict between spending your time on something that's internal to MES and spending your time on a billable project for some outside client?
Yeah, I think that, you know, part of that is working with the test group to understand, you know, the urgency of the external project, as well as doing a risk assessment internally to say, if we defer this audit project to 2027, the 2028 plan, for instance, you know, what is the risk there? Is it a high risk, a medium risk, or a low risk that we can defer that? And based on that assessment, determining whether we would potentially cut budget hours for a billable project, or choose to defer that project into the 2028 plan.
Yeah, I know you're estimating 2,500 hours for the fiscal year upcoming. I think it'd be helpful for us to know how many billable hours did the team have for FY26, which I know is not over.
An apples to apples comparison. The billable hours that I have tracked are from October of 2025 through the end of April of 2026. And that was, I believe, double check to make sure I have the right number. 2,490.5.
Okay, so you're already bumping up at 2,500 for less than a full fiscal year.
Technically, it is a rolling 12-month period. October through the end of April, I believe, is a rolling 12 months. It's not.
That doesn't sound like 12 months to me.
Apologies. Oh, you're right. I'm sorry. That is from May of 2025 through April of 2026.
Oh,
Still working on my fiscal years and dates. I'm sorry. It's been a bit of an adjustment that Dr. Glass can probably attest to.
And yeah, so we have a more robust audit office that went from 0 when I started to 5 at its peak, and it'll go back to 5. The intention is for it to go back to 5. The statute requires that, you know, for an overhead position, we have a panel interview process, so I just can't promote Mr. Dowdell and then hire his replacement, and just want to make sure that if all of those seats are settled, that, you know, we go back to it. But the audit department has only been able to expand through the billable work, is what I'd like to just let the board know. I mean, an audit office of 2 was the size of the function before billable work started expanding. So we would have to then look at overhead expenses and expansion of our overhead costs if we were going to have an office of 5 that did not do billable work. So, and that's, I just wanted the origin story of the office, and as it's grown, has been for them to do billable work and to become more robust. And so one of the first hires as a trainee is now been promoted and has gotten better skills, and we skipped and hired Mr. Dowdell. So we look to expand. We look to expand the role for the environmental agencies because they need assistance with their own grantsmanship and their own fiscal stewardship. So it's been working. It's been working very well, and they've been very productive. It's all in balance. We are working on overhead budgets right now. But Mr. Patel's been very busy. And we look to continue to support them because it has been a thriving arm of the agency as far as expansion. So.
Okay.
Awesome, thank you. So I think, I don't know if it completed my thought or not, but I think that we'll either ask the audit committee to approve the plan or ask them to recommend that the board approve the plan. Pam, I know that we were talking about that. I'm not sure what the end thought was, but
I don't think we came to it. I think we were gonna defer to the committee to decide.
perfect. Yep, so we'll defer to the committee to decide on what to do there. I can either pause now for that or I can wait till the end. Doesn't matter.
I think keep going.
I'll keep going. Moving on to the FY 28 internal audit plan. I will note that the internal 28 or the audit plan for the October 2028 fiscal year is subject to change. We will review this again in probably May of next year for formal approval. Oh, I skipped a slide. Oh my goodness. Sorry. I don't have that one. Anyway, I guess I'll go back here so we don't skip a slide. This is just an overview of things that I've already said. We're carrying over 3 audit projects from the 2025 to 2026 audit years into the 2027 audit year, as well as that audit project from 24-02 from 2024, since we no longer have an independence concern. So this is kind of just a review slide of the information that I've already talked about. Now we can move to FY 28. Thank you. Okay, so you'll see a lot of the same things here. I'm not going to go through all of them. So we have the internal audit assessment, risk assessment and plan. We have monitoring the fraud hotline. We have the special investigations. I will note that we have pulled down the hours from auxiliaries here. We have a bit of a backlog with our corrective action plan follow-up I'd like to try to get through, as well as the external audit assessment, which hopefully we can accomplish in the 27 audit plan year. Again, I've used the 2,500 hours for consulting services based on the 12-year rolling period from May of 2025 through April of 2026. And then we have the integrated review here. Another one of the areas that the IAA has asked that all of their are included in their standards is third-party risk management governance. So that is one of the projects that I plan on having here, doing a deep dive. We have a lot of third parties. We have a lot of procurements, a lot of third-party managements, a lot of contracts. So I want to make sure that we have, a project on the plan to look at those. And then moving into the operational piece, I would like to perform a review over the MES COOP. It's another one of those areas where the IAA standards tend to focus, which is kind of just like the business recovery and disaster management plan, taking a review of the actual plan itself, and then looking at the readiness of the operational units. Again, this is subject to change. Anything we don't complete in the FY 27 plan could potentially be rolled into the FY 28 plan. And we'll redo the risk assessment next year as well to ensure that the risks of the organization haven't changed in a way that would materially impact this plan. Any questions, comments, concerns?
Committee members, board members, any questions?
As you can see, Mr. Dowdell is a genius auditor, but he continues to struggle with fiscal year dates, and we corrected it, but now it's wrong again. Why is it fiscal year 29 on the slide? You see that? Like,
I do. I am we just corrected it, and now it is back. Is there a special training that I can take? Apparently I'm in need of it.
More government time.
I think I'm gonna make him a graphic that he can have on his desk.
I would appreciate that. I would appreciate that. And I really hope to have more government time in order to make that change.
Thank you, Mr. Dowdell. Something which was brought to my attention, and I want to just point it out, that Ms. Phillips and Dr. Johnson are not part of the audit committee, so they couldn't have seconded and voted on that motion. So Mr. Coleman.
I was wondering that. I literally thought it after I said it.
Ms. Fuller, do you want us to take another vote, or are you just going to correct it and have, I believe, Ms. Heller seconded?
I'll say I had actually wrote down that Ms. Heller and Ms. Phillips seconded, so I'm just gonna cross out Ms. Phillips, if that's okay. I
I
thought
was
heard
really
it.
here so I could hear. I wanted to hear what happened in this committee and I got all overexcited. I apologize.
No worries. So Ms. Fuller,
I have never heard the term excited in the same context as the audit committee.
First. Yeah, I think
To learn. Learning is my favorite thing.
so. I'll have the minutes reflect that Mr. Coleman made the motion and Ms. Heller seconded, and that all the and then all members were in favor.
Thank you, Ms. Fuller. Our next agenda item is any old and new business items, committee members.
Well,
Dr.
actually,
Glass. Oh, go ahead.
actually, the committee needs to decide if they want to approve this plan or if they want to recommend approval of this plan by the full board.
Thank you, Ms. Fuller. Do we take a vote or is it just an approval by show of hands?
Well, so we really weren't sure whether the audit committee can approve the plan or if the full board has to approve the plan. So I guess that's up to the committee.
Was I believe it was mentioned what it says in the charter. Could you recap?
Yeah,
I don't remember if it was Mr. Dowdell or somebody else.
Of course. So the charter indicates in the board oversight section that the responsibility lies with the board to approve the audit plan. I will indicate that in my previous roles that the audit committee was the board that was being referred to during that audit charter, as part of that audit charter. Here it just states the board, so I think it's kind of up to interpretation of which quote unquote board or committee would like to approve the audit plan.
I think technically the audit committee can only make recommendations and vote on it. The vote still has to be the full board. We don't have the full authority, so it has to go to the board regardless. So we can make that motion to approve it and send it to the board for full vote by the board. And we do need to correct the FY28 to FY27. Is that correct, Dr. Glass?
He has the FY28 is correct on the left-hand side of the slide. It's just that his dates are for FY29. He just needs to take the July 2028 and make it 2027, and June 2028 would be matching fiscal year. Yeah.
So Ms. Fuller, do you want us to take a vote to send it to the board for approval?
To recommend approval, yes, please.
Right.
Madam Chair, I'll move that the audit committee recommend to the full board approval of the internal audit plan as presented to the board today as amended with respect to the dates.
Thank you, Mr. Coleman. Do you have a second?
I'll second.
Thank you, Ms. Heller. All those in favor, please raise your hand. Right hand. Thank you. Voted. And Ms. Fuller.
Thank you.
And this will go to the board for approval at the next board meeting. What are we sharing?
Okay.
Yep, I have a
Yes.
couple slides left. I know we're running up on time, so I'll run through them quickly. In the IA standards in section 8.4, it is required that the audit executive must develop a plan for external assessment from the audit committee. So I would like to come to you telling you that I'm in the process of developing a plan. In the October meeting, we will review that plan. My initial thoughts of the plan would be to have our initial assessment. MES internal audit has never been assessed by an external auditor. There are two ways you can go about it. You can perform an internal assessment with external validation of that assessment, or you can have an external assessment done. Since it's our first one, I would recommend that we do a full external assessment. So I'm in the process of gathering, timing and costs along with that plan. And then I will present that plan in October, but I just wanted to make sure everybody was aware that that will be coming to you in October. Any questions on the external assessment? Okay. The next couple slides are about our billable work that we have done. So as far as the MDEM COVID closeout project, we billed 381 hours between the period of October 2025 and January of 2026 for a total amount of $22,884.99. This project was completed in early January, so we're no longer actively working on that project. The next project is the MDE task number 1 for procurement. We have billed 238 hours to that project through the same period of October 2025 to April of 2026, with a billable revenue of $13,405.42. That project is that task is expected to end at 6:30. We are in communication with Ms. Condra from TESS and MDE to potentially expand that task. So more to come there, which I'm sure we'll revisit in October. And then the last billable task that we have is the task 4 for the fiscal group for MDE. We built 871 hours to that project for a billable revenue of $53,981.48 from the same period of October 25 through April of 2026. Again, this task is projected to end on 6:30 of 2026. But we're looking at potentially expanding it. Our total billable work for the period of October 25 through April of 2026 was 89,971. Our total billable for that rolling 12-month period from May of 2025 through April was $181,381.32, which accounts for over 50% of, I know the numbers don't entirely match, or the timing doesn't entirely match, of our 2026 operating budget. So we spent over 50% of our budget, dollar amount wise, not necessarily time wise, on billable projects. Any questions, comments, thoughts? Okay, thank you.
Thank you, Mr. Dowdle. Our next audit committee meeting will be October 22nd, 2026. Is there any old or new business to be discussed? Hearing none, I will adjourn the audit committee meeting, and the next audit committee meeting, as I said, was in October 2022, 2026. With that, the meeting is adjourned. Thank you, everybody, and have a good Memorial Day weekend.
You too.
Thank you, you too.
Madam Chair.